All right. Well, we are live. Welcome, Kayla McDonald with Remax Alliance Group. I am your real estate professional, and of course, Miss Lindsay Weber.
Hello, hello. Keystone Mortgage Solutions. And we have our guest, Miss Traci Schluer, correct? All right, I was making sure I pronounced it the right way. I apologize. Why don't you tell us a little bit about yourself and what you do?
Okay. So again, my name's Traci Schluer. I'm with Experior Financial Group, and what I do is provide protection for families with mortgage protection or any type of life insurance that they may need. Um, so coming on here, I thought it would be some good education to understand the difference between mortgage protection and mortgage insurance.
Good for
Um,
you said that because when Kayla and I were talking, I was like, oh, she's going to teach us, about mortgage insurance, like the ins and outs, but it's not
no,
Yeah.
mortgage
I was like, no, it's
insurance.
different. I'm like it
no,
sounds the same, but it is different.
Very
it is
different. So
very
I'm very
different.
interested.
Yeah. So, mortgage insurance actually is required for you to have on your home so that should you default on payments, it actually protects the lender. Mortgage protection is totally reversed. That is actually protection for the homeowner. So, if you were to become critically ill, sick, couldn't go to work, something like that, and were unable to pay your mortgage for a few months, or sometimes in the lifetime of your loan. What I do is I provide quotes for you. We walk through things to make sure I'm putting in place the proper coverage for you and your family. So let's just say, for instance, a home is $400,000, and you wanted to get insured for $400,000 to make sure that since you are the breadwinner of your family, you're the only one working. Should anything happen to you, you become ill, you become injured, an accident happens, and you can't go back to work. You're able to pull funds out of this type of insurance to help provide payments for your home and your monthly mortgage payments, or you can should an event happen and someone pass away, which we don't like to talk about that, but it does happen. Everybody's going to pass at some time. The family is not going to be hurt and not have a place to go. The mortgage will be paid for with that mortgage protection. So it's totally movable. So if you are, you get a home and then 5 years later you decide you want to move, the mortgage protection goes with you as the homeowner. It doesn't stay with the mortgage, the loan, anything like that. It is strictly assigned to you as the homeowner. So if you go purchase another home and it may be more than what you have currently, you're able to call in and get that changed and up your base amount if you'd like to do that. So yeah, that's what I provide, and it solely depends on everybody's lifestyle and what they need actual coverage for. But it can be very affordable. People are really afraid to even look into life insurance, and once they're educated on it, I feel like they see the importance then.
So, and I'm sure everyone is a little bit different, but like on average, say that they had, I don't know, a $400,000 house. What kind of like premiums, what kind of monthly bill would something like that be? And I know you can't give me an exact, but like on average, just like to get an idea.
Yeah, so it's all going to be based on your health. If you are a non-smoker or smoker, um, your age definitely plays a factor. So for all my young homeowners, this is something that I would recommend you getting like quickly, because as you age, not only do you end up getting like some type of diagnosis in your 30s or 40s, late 30s, early 40s. A lot of people start developing their illnesses and things like that as they get older. So I recommend definitely getting younger. But, it can be anywhere. I'd say $29 and up. It just depends.
Oh,
So that's, I mean, that seems really affordable.
Yeah.
So
Yeah.
in what,
Just, oh, I'm sorry.
no, you go ahead.
I was going to say, I just actually wrote one, or actually did a quote for a lady that is 49 years old. Her home was $450,000 and it's costing her $68.
hmm.
And that doesn't, it's not wrapped in your mortgage. Like
No.
that's a separate thing.
Yep, it's separate. And then a lot of our mortgage protection come with living benefits, which is a great thing to have. So again, when I say that you might get hurt, let's say you're playing baseball with your kids, or you're on a league or something, and you get hurt. You hurt your leg, you can't walk, or you can't do something that you needed to do for work. There are benefits in these living benefits that allow you to withdraw a certain percentage from your face amount to help you live while you're injured and pay your mortgage payments.
Okay. I've seen stuff like that, like on life insurance policies and insurance, like just insurance policies that you can draw
Yeah.
against that policy. And, I don't really know how like the repayment or whatever, how that works, or if there's interest tacked onto it or not. There's no
It's all
interest.
it's all non-taxable, no interest, and it depends on the policy that you actually pick,
Yeah.
whether you have to pay it back or it just decreases your face amount upon the death.
Okay.
So when you're setting up this policy, of course, you're basing it, I assume, on whatever your current mortgage payment is.
Yes.
And recently, like we've had a lot of fluctuation in tax bills and insurance bills and things like that. So if that were to take place and you have this insurance in place and you needed to increase it to be able to cover that new payment to include your taxes and insurance, is that something that's easy to be
Yes.
done, or do you have to restart, or?
No, you don't have to restart. They could either call me as a licensed broker. I will get in contact with their carrier, and then we can do an increase like that. What I try to do is I usually don't base it on the mortgage amount. We base it on the actual whole amount of what the whole mortgage is. But again, if something should increase at any time, you're welcome to up the
Yeah.
coverage if you need to.
Okay. So I guess you'd be taking a large draw rather than like, oh, pay the monthly payment.
You
As
can
it,
set it up. You can set it up. So should something happen where someone gets hurt and they can't go to work and they need to withdraw, you can set it up as a monthly payment to where your mortgage can be paid monthly, or you can take a draw of 75% and a lump sum to help pay for that.
so essentially, like if something were to happen and you're using it to pay a portion of your mortgage payment, but something happens to the house as well, you could use it for something like that too.
Yeah.
Because,
So with the mortgage
great.
protection, so with the mortgage protection, what's really good is it's there for the mortgage, but some people have like doctor bills that they need to
Sure.
pay during that time, or whatever they need help with. That's what it's there for. It is a form. It is life insurance. So if you need to, let's say, I don't know, you were in a car accident, you couldn't go back to work, but yet eventually you're going to need to purchase a car, right, to get back to work. You can
Mhm.
do that with this money. It's not something that has to be directly paid to the mortgage company.
Okay.
So is there like a criteria or anything that needs to be met? So say that we're working on a on a transaction and we're going to closing. Is it best to get that policy right there, like at closing, or is there a certain time that they have to wait to apply for it to own the home a certain amount of time, or?
No. We can do, I actually was talking to a couple brokers for this. I have little brochures that I can give you guys to put with your closing packets. But if anybody would like me, I can be at closings. I can be wherever. Even if it's just to educate the person and then they want to think about it, I have no problem doing that. Um, but I would definitely recommend getting sooner than later. I've seen where people, have just purchased homes, and then within the 6 months something happens dramatic. And that's when I get those phone calls, and they're like, "We should have did this then, but is there any way we can do it now?"
Yeah.
So it is definitely something that if you know you get a big loan like that, you definitely want to make sure that you as the borrower are insured on your health, and should anything go wrong.
Right. But like you said, it's just basically like a life insurance policy, but it's just a different form of
Yeah,
it. And, it's probably good to have both. So that way, your life insurance policy covers, whatever lump sum that is. You can, however much you want to leave your loved ones um, at the end, but this is more just to make sure that your house is protected
yeah,
in case something should happen. But like you said, you have that flexibility to use it for, whatever it is that you need.
yeah.
Now, when you with what happens when you pay the house off? So let's say 30 years, you get this policy, you just bought your house, and let's say 30 years from now, you don't ever move,
Mhm.
you pay your house off. So then, what happens then with this policy? Do you get all the money back or, you
So
know,
again, there are different policies for everyone that I can, put together. There are
mhm,
return of premiums where you pay into a certain policy if you're approved, and it will give you all of your premiums back at the end of the term, which could be a pretty good lump sum.
mhm,
And it works really well. It's like a dual coverage. So if something should happen to you, the family is covered, and they're not going to, burden the loss of their home.
mhm,
But then again, if you are still alive at the term of the policy, you're going to get all of your premiums back in a lump sum check. And then you're able to also, start a new policy for the elder years, or however many more years you would like to be covered.
yeah, because like I know that like the policy, because like I actually set up a policy, a life insurance policy with Tracy, and it's one that I will get my money back and some
Yep.
once the 30 years is up, as long as I'm not dead, like, but it was pretty affordable. And, I hope in 30 years I'm still alive. And then I'll,
Yeah.
it's almost like almost like a savings account,
Yep.
but I get like a little bit of interest. Now, with so let's just say somebody wrote a policy, and in the event that they still are alive, their house is paid off, and they get that policy money back, is that it's not taxable, you
It is not
said?
taxable. No,
Yeah.
that's the good thing about it. I mean, you don't have to claim it at all. So if you have a savings account and you're putting
Mhm.
money in there, you have to claim that on your taxes.
Yeah.
With the life insurance, you do not have to claim that at all. It is all tax free.
Okay. Yeah, because essentially you've already paid taxes on that money,
Right.
Right.
right?
Right.
Yeah. So no, there's no double dipping happening.
No, no.
Okay.
No, and
Good.
it's really good. That particular plan is really good for the young people. Even if you don't have a home,
Mhm.
you know, if you want something like that, to where it's kind of like it's going to make you save, like you pay your monthly premium, which could be, in that case, with the return of premium, and you're really young. I mean, you can get those for 20 some dollars a month, probably. Just
What's really
depending.
young?
I'm sorry.
I said, what's really young? And I'm not being
Um,
funny. Like, I
So
mean,
I have 20-year-old, 22-year-olds, um,
and
and
where's that line? Like in your mid 30s, 40s, like that goes to a different.
it's usually going to start increasing about 35.
So I'm old. Okay, got
Well,
it.
I'm 49, so yeah, I'll be
Sheila, hurry
49 this
up.
year. Thank you.
Get a policy.
That's why
I
I told
mean,
Kayla, get it now. You're
Right,
young.
get it out.
yeah. So I'm like, okay. I'm like, I'll do it because I mean, and like a lot of people don't, and I didn't know that about life insurance. And she helped educate me on that. Like, she's like, not all life insurance actually covers you if you die for any reason, and most of them you don't get your money back. So that like those are important things. Like you might be paying into a, $15 a month policy, but she told me, she's like, well, actually this policy that you have, doesn't cover you. Like if you get sick, it's only accidental, which I feel like in my eyes, every death is accidental. Um, so like,
Well, the
it,
accidental on that one is if you're in a car wreck, a plane wreck, a ship sink, or God forbid any of that happen. But those are the accidents they're talking about. And if you do die because of an accident, your face amount actually will double. So the beneficiary will get double the amount if one of those occur.
mm-hmm,
So I know that we're talking about the life portion of it. However, all right. So my father passed away, and getting finances together in a time frame that needed to be done to pay for funeral expenses and all of those types of things, that was really difficult. In fact, it didn't happen. So I had to take my own funds to be able to, pay for the funeral and uh, cremation here nor there. So all the expenses, and then everything came later on, and I'll call it essentially reimbursed me for, the amount. But not a lot of people are able to do that. I was
Right.
young, so I struggled to be able to come up with, the
Right.
money to be able to do it the right way, and it actually. Um, Made me make decisions based on finances rather than what should have been done.
Right.
mm-hmm.
So, with your policies, is that something that they have the ability to access quickly, or do you still have to wait for that time frame? Is there any way to avoid that?
Depending on, and again, it's depending on the type of policy because some of those are such large amounts. But I do know that to pay for the funeral, there's usually a 1 to 3 day process, even if it's just enough to give like a quarter of the money to give to the beneficiary to cover the funeral expenses. They've been very good at giving that out within 72 hours.
Well, that's great, and I mean it's been some time, but that was
Yeah,
really like a problem. Like when I
yeah,
was
it's
trying to
hard.
figure things out, I was in my early 20s, and I didn't have the financial means to say, oh,
Right,
okay, I'm gonna come out of my savings for dot 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 dollar amount, and I have no idea what's going to happen.
right.
It was a whole thing. So that's nice to know that they have that ability to at least give
Yeah.
them something towards it.
And whoever gets a policy with me as their agent, I am going to stick with them from the end as long as I'm alive. So if somebody passes away, they can always give me a call. I know they're not going to want to sit on the phone with the carrier even
Yeah.
for 10 minutes. They're mourning, they want, they're grieving, they want time with family. I can take care of all that for them, so it's not a process that they have to go through alone.
Right. Well,
And
that's
that's nice to know,
Yeah,
because like you said, it's just a horrible time for everybody.
yeah.
And you have so much like that you have to do and take care of in such a short, like right away.
right.
And, you're mourning, you're not thinking straight. And it's a tough time for everybody. And you're like, holy crap, like I have to get their
Yeah.
house ready to sell it or whatever they're doing with it. You have to figure out
Where
if
they
they
are
have,
in the mortgage. I mean,
Right,
yeah,
right.
we're talking about that. Like, are the payments on time? You don't know somebody's
Yeah,
financial situation
yeah,
until you're in it. Um, but
yeah.
that
And
comes up
with
all the time. We've had like ladybird deeds and trying to refinance out of those and different
right,
amounts that
yeah,
it can get kind of messy really quick. So
oh yeah,
yeah,
mhm.
yeah. And
yeah,
all while you're just trying to, help comfort your
Yeah,
family and yourself and whoever and plan a funeral.
yeah. It's really difficult.
Yeah.
And that's why whenever I sit down with a family, I'm usually with the family for a couple hours, doing the mortgage protection because I actually want to educate them on also getting a will made and putting,
Yeah.
all of this information in a secure place to where they know where it's going to be. Let the beneficiary know where it's going to be. Maybe let, a family member know in case something happens to both the beneficiary and the policy holder.
Yeah.
Just knowing where things are, knowing the policy numbers, the amounts, and having all of your finances in the same area so that should anything happen to you, someone is there and able to look and make sure things are getting done correctly.
Yeah. Well,
So, how did you get started into this? I know that you used to do like property management before,
Mhm.
but what prompted you to say, I want to start doing life insurance and mortgage insurance policies? Like, did you meet somebody that introduced you to what this mortgage protection was, and you were like, that's what I want to do? Like, how did you get here?
So it was actually due to a death, and I watched my mom struggle with my grandfather's passing and finances and not having anything in place, and not what with my mom having my grandfather pass away, and then not more than a week later my mom's friend passed away. And it was like just a real shock to me, because then I sat back and I'm like, wait a second, I don't even have any of this in place. Like, this is crazy. It really happens. This is something that no matter what you do, you're going to pass away at some time. And you don't want to leave the burden on your family to take care of, because my mom, and it's been 3 years now, because I've been in business for 3 years. My mom is still going through trying to figure things out for my grandpa, and it's been a real hard struggle. So
Yeah.
that right there triggered me to go, get my license and get educated, and more than anything, educate people on what, the right thing to do is, so that you're not leaving a burden for anyone else.
yeah.
Yeah. No, that makes sense.
But
And
even to have that protection, like, just say that something happens and, that security behind you, like, okay, this isn't the end all be all. I'm going to lose my house. I'm going to lose, all of
Yeah.
these things just for that small amount on a monthly basis to be able to protect it's your
Yeah.
investment. It's the largest purchase that you'll make your entire
Yeah.
life.
yeah.
And we only do it a few times,
Right.
sometimes only once, but
Hmm.
to have that security behind you that if something were to happen, for just a small amount on a monthly basis to cover and to make sure that, you don't need to worry about where you're going to go or losing your house or what your kids are going to do. And um,
Yeah. You don't
I,
want your family on the streets with no home. I mean,
no,
I've seen it happen. It's sad. And
yeah,
Hmm.
if they would just look into it, like I said, I will sit with anybody. I will Zoom with anyone, even if it's just to educate you on, what mortgage protection is.
Uh, Hi, Rhonda.
Hey, Rhonda.
Rhonda's here. I don't know if Reagan's still on, but he popped in a minute
he
ago.
said, "Bravo!" He was watching our live. It's probably posted on the hub, so hopefully lots of people are watching and learning a little bit from this, and
Yeah.
can reach out and to contact you and get at least some information.
Yeah.
Like that, I've learned so much just in the short couple minutes that we've been here. But um, what a great thing to add. And I had no idea that it was as
Hmm.
inexpensive as you're telling saying that it is.
Oh,
It's
yeah.
great.
Most people don't, and that's why they're afraid to contact someone.
Yeah, and it's not really something anybody wants to talk about, but the truth
No,
Right.
is
no,
that it
nobody,
happens.
nobody
Yeah.
wants to talk about that. Now, do
No.
you do you work with like estate planners and or like attorneys that help put together like a trust or a will or
Yes. So
things
when
like
I
that to help prepare
Yep.
for?
So when I write mortgage protection for families, I give them information on contacting an attorney for wills. We actually do that through Experior. They can do it through us, or what I try to do is whoever I'm going to visit, I will look up attorneys that do wills and trust in their area, and just kind of give them a little, maybe three or four, to give a call to and just talk to them. Because definitely once you get your policy, you want to go get that will made, and you want to include that policy in your will.
Mhm.
Okay, yeah, that makes sense, because I think that that's important because
Yeah.
like you were saying, like your mom is still dealing with all of that, and
Mhm.
maybe like if she doesn't know that a will actually existed, where do you even start?
Yeah.
When that does happen. So
Yeah.
it's definitely interesting, and not exactly a popular topic to
No.
want to open up and start talking about, but and I've seen it, with my clients and friends where they had their parents, in-laws or whoever it was, set everything up
Mhm.
for them. So it was, it made that horrible time a little bit easier and less stressful for them because they didn't have to go searching anywhere for anything. Like they already knew what was going to happen. They knew about the will, they knew about everything. And then I've seen the complete opposite where it was just like, holy crap,
Yeah.
you know.
A friend of mine just recently lose a family member, and there was some discrepancies regarding the will and where it was and who had it, and
Yeah.
it was like a whole thing. So it definitely is a weird time. You never know how people are going to react. Most, I don't want to say most. Sometimes they're reacting on emotion, not
Right.
logic.
Right. Yeah.
And I feel like that's really reasonable. Everybody grieves differently, and
And
you
you
know,
would
so,
never know if they had a mortgage protection policy if it wasn't listed in their
Their will.
will, or like along with the rest of the stuff that you know about. But a lot of times,
Yeah.
yeah.
stuff isn't set up, and maybe they have this policy and it's set aside and nobody even knows it.
Mm-hmm.
Well, what is good with some of the policies, I can actually include the beneficiary in any statements that get mailed out if the policyholder wants, which I encourage that to happen. Should anything happen to the policyholder, then the beneficiary is still getting all the information and they know exactly who to contact for, help.
Right.
Right.
But they also have my number too, and we can work together.
Okay.
Yeah.
Are
That's
you?
good.
Where are you located, Tracy? Are you
I'm in
local?
Safety Harbor.
Safety Harbor. Okay.
Yeah,
So
we
not.
just joined the Safety Harbor Commerce Chamber of Commerce, so we
Oh,
just
nice.
did that and looking to venture out a little bit. So
Yeah. Are you the sole owner, or is it a like a franchise type of thing?
it's an IMO, which is an insurance marketing organization. So all licensed insurance agents have to work under an IMO, just kind of like with a broker and an agent in real estate.
Yeah.
Um, but yeah, so I love the company. Very, very great people. Actually originated in Canada and just came to the US, and just great, great company.
Cool.
But anybody that purchases insurance through me, they actually will they'll just deal with me strictly.
Cool.
And it's Experior Financial Group.
Yes.
All right, Miss Rhonda shared us. If anybody is listening, please share all the information that we just received from Miss Tracy.
Yeah.
It's really great, and not a lot of people know. And it's really security system behind you if something were to ever happen.
Yeah.
Or if you just needed it, if you lost your job or you were going through, like you said, an accident and you needed those funds, it's
Yeah.
interest and tax free that you can draw against it, of course, depending on the policy. But,
Right.
it's nice to have that. It's almost like having like a HELOC or something,
Yeah.
potentially,
Yeah,
in a
something
way, I
that's
guess it sounds like. So,
welcome. Hmm.
um, we are coming up to our final minute here. So if you can, Tracy, just let everybody know how can they reach you, if they have any more questions, or they are thinking about starting a policy, whether it's the mortgage protection and or life insurance.
Yeah. You can reach me by text is usually best because I can be out and wandering or with other clients. But it's 614-296-5255. And I can come to you. We can do a Zoom. I'm here for whoever needs it. Even if it's just educating you, like I said, I would be happy to sit with you and go over all of your needs and wants and see what type of a plan we can put in place for you to protect your family.
Awesome. Well, thank you so much. This was very
Thank you for having
educating,
me.
fun, and all that good stuff. So
Yeah.
I think that concludes our
Thank you,
show.
ladies.
Yeah,
Yeah.
thank you so much for coming.
Yeah.
And we'll be here back next week, next Tuesday at 12 o'clock.
Yep.
And we'll make some posts on who our guest will be. And if anybody needs anything, please reach out.
Yeah.
Okay,
All right, guys.
Have a good rest of your day.
Rest of your day.